All right, let's pull back the curtain on the stock market. I know it can feel super intimidating, but it's one of the most powerful tools out there for building wealth. And we're going to break it all down for you step by simple step. So, do you ever feel like the stock market is some kind of exclusive club for Wall Street geniuses? You're definitely not alone. All the jargon, the crazy charts, it can feel like a totally different language. But what if I told you that you absolutely do not need to be a financial wizard to win at this game? In fact, we're about to look at some data that proves the most powerful investing strategy is, well, it's shockingly simple. It's a secret that kind of flips the whole idea of being a perfect investor completely on its head. Stay with me here. Okay, so let's start with the absolute basics. When people throw around the term the stock market, what are we actually really talking about? Just imagine a giant worldwide marketplace. Seriously. But instead of people selling, apples and oranges, they're buying and selling tiny little pieces of companies. That's all a stock is, a small slice of ownership. When you buy a share of a company, you literally become a part owner. Pretty cool, right? Okay, so if it's just a big marketplace, what makes the prices of these little company slices go up and down so much? I mean, it can seem totally random and chaotic, but trust me, there's a logic to it. Let's dig into the method behind the madness. It really boils down to three main forces. First up, you've got the company's actual health. Is it making money? Is it growing? We call these the fundamentals. Then there's the overall economic weather. Think of things like inflation or interest rates that affect pretty much everybody. And finally, you have the mood of the crowd. This one is all about human emotion, fear, excitement, panic, how people react to the latest news. It's this constant dance between cold, hard facts and human feeling. And that last point, the crowd's mood, that leads us directly to the biggest myth in all of investing. This idea that to be successful, you have to be some kind of fortune teller who can perfectly predict every single move the market makes. Yeah, let's just go ahead and bust that myth right now. This is the question that paralyzes so many people just starting out. When is the perfect time to jump in? It feels like everything is riding on this one decision. But what if that's completely the wrong question to be asking in the first place? Let's see what the data says. To show you what I mean, we're going to look at this really fascinating study from Charles Schwab. They basically created 5 imaginary investors. Each one invests the exact same amount of money, $2,000 a year for 20 years, but they all have completely different strategies for when they invest. So let's meet the crew. First, you've got Peter Perfect. This guy has a magic crystal ball and manages to invest at the absolute lowest point of the market every single year. Then there's Ashley Action. She doesn't overthink it. She just invests her money on the very first day of the year, every year. We also have the incredibly unlucky Rosie Rotten, who, poor thing, invests at the market's absolute peak every single year. And finally, there's Larry Linger, who was just too nervous to ever invest, so he kept all his money in cash. And here are the results. Okay, so no surprise, Peter Perfect, with his magic timing, his bar is the highest. He came out on top. But just look at how close Ashley's bar is, the one who just invested right away without thinking about it. And now look at Rosie, with the absolute worst timing imaginable. She still ended up with way, way more money than Larry, who just stayed in cash. This is huge. It proves that even the worst possible timing is dramatically better than no timing at all. But here's the most mind-blowing part. After 20 years, the difference between Peter's impossible, perfect, magical timing and Ashley's simple just get it done strategy was only about 15 grand. That's it. That's the price of trying to be perfect. The study's own conclusion says it all, perfectly. The cost of waiting for the perfect moment typically exceeds the benefit of even perfect timing. Let me say that another way. Waiting around for the perfect time is the single costliest mistake you can make. So here it is. This is the single most important lesson you can learn about investing. The real secret, the real power, isn't in timing the market. It's about giving your money time in the market to do its thing and grow. That is the key to long-term success. Okay, so we've established that just getting started is what really matters. So how do you actually do that? Let's walk through the first practical steps. It's a pretty straightforward 4-step process. First, get your finances prepped. That means building up an emergency fund and paying off any high-interest debt, like credit cards. This is your safety net. Second, you open an investment account. This is the place your money is going to live and grow. You do this with a company called a brokerage. Third, you choose what you actually want to invest in.
And fourth, the important part, you invest consistently. This is how you really put the power of time to work for you.
Now, when it comes to choosing your investments, you've basically got two main paths. You can buy individual stocks, which is kind of like betting on a single horse to win a race. The potential payoff could be huge, but, so is the risk if that horse stumbles. Or you can buy a stock fund, something like an ETF or a mutual fund. This is like a pre-made basket of a whole bunch of different stocks. It's like betting on a bunch of horses all at once. It automatically spreads out your risk, which is a really important concept called diversification.
For most people who are just starting out, a simple, low-cost index fund or an ETF is a fantastic place to begin. It instantly gives you that diversification across hundreds of companies, so you don't have to stress about picking individual winners and losers. It is a super simple and really effective way to get in the game.
So, if you're feeling ready to take that next step, we've put together a list of our favorite tools and resources specifically for beginners. Just check out the link in the description below to help you get started on your own journey. So, when it all comes down to it, we've learned the real secret isn't having a crystal ball. It's not about knowing when to invest. It's about starting soon enough to give your money the one thing it needs most to grow, and that's time. So the only real question left is, what's your first step going to be?